All right. Welcome everyone. It's good to be here. Um, we're just gonna give everyone a chance to pour in, give it a few minutes for people to join us. Um, yeah, and just catch up with each other in the meantime. Anastasia, last time or when we met, you were in Hong Kong at Consensus. Since then, we've been moving all around the world. What are you up to?
Yeah, that's right. We met at our event when we hosted one of the RWA side events during Consensus, and thanks again for attending it. And I hope you like the rest of the week in Hong Kong. That was a very busy week. I believe now in Hong Kong it's also busy. It's a Web3 festival, which unfortunately I'm not attending. I think it's already happening now this week. And I'm stalking all the people on my Telegram with their stories. So I'm pretty sure there's some side events already going on. Yeah. But yeah, so far it's been, I guess, like the second event after Consensus in Hong Kong, and then I think the next bigger one would be the WoW Summit, the WOW. For me, I just sort of left Hong Kong almost right away to go to the Digital Asset Summit in New York, and I stayed around here, visited Texas in between then and then now I'm back in New York.
Yeah. I was
So
wondering about like Texas. Was that like random, or was there like an event there, or like I don't
no event. No, I actually haven't met a single crypto person in Texas. It's just
know?
purely for personal reasons. I was visiting a friend that's and her family that I haven't seen in a couple of years, and I've never been to Texas, so I thought that was a good excuse. So just went, and our team was
Did you go
fully
to
remote, so
Bucky's?
I was still yeah
You did? Okay.
the gas station with that
Yeah.
giant supermarket. Yeah, I tried their pulled pork sandwich. It was so good.
They
Very
got great.
Texian.
Yeah, for sure. They're like famous for barbecue and meat and all that good stuff. Um, so yeah, I personally I can't wait to go to Texas, but yeah, I'll have to wait on that one. We'll have to run this show before that. So yeah, I'm gonna kick it off to the audience, everyone that's here. Welcome back. This market cap episode number 5 already. And yeah, we're going to do what we always do, get into the market movements, recent events, trending narratives, and try to dig a little bit deeper and try to make a little bit sense of it all. We do this weekly with our team members, the analysts from the team, and this episode, for the first time, we have a lovely guest, which is Anastasia from Defactor. In a second, I will introduce everyone properly. We're live on X. We're also live on YouTube, where you can catch us, and we'll post a video on YouTube this Saturday as well. So, without further ado, I want to introduce our team. We got Daniel, which is our research lead, and he covers mostly newsletters and token theses. We got D, which is our contributor and analyst on the team, and mostly handles the this panel, market cap. And then as our guest, we got Anastasia, who's head of growth at Defactor. Anastasia, welcome. How are you?
Thank you. I'm good. Thanks. As I mentioned, I'm right now in New York, but typically based in Hong Kong, so missing Asia a lot. And yeah, thanks for having me, guys. For a couple of your previous episodes. So looking forward to discussing all the crazy stuff that's going on this week.
For sure. Tell us like a little bit, like in one or two, three sentences about like Defactor. Obviously, you're in the RWA space, and we're going to get into that today as well. But yeah, please just.
Sure. Yeah. I mean, I guess just a quick background about myself as well. Like, I've been in the fintech space for pretty much my entire career. First in the traditional finance fintech, and then about 3 years ago, switched full time to digital assets and started with a custodian and then moved on to real world assets. And Defactor basically was already around at that time. We are a 3.5-year-old project. The token, which is Factor token FACTR, has also been live for over 3 years on a couple of exchanges. And we started with tokenizing trade finance assets and bridging that sort of like crypto capital with the SMEs that wanted to borrow based on those receivables and invoices. And then quickly we took that technology, and after the first pretty much like year and a half, we've sort of repackaged all the tech that we had developed into a toolkit that we now provide to RWA platforms that want to essentially go from 0 to 1. So the Defactor toolkit is able to help other projects tokenize their assets, or if they had already tokenized it in-house or with any other provider, we can also provide the functionality of lending and borrowing, which is when you lock your tokenized asset, let's say that's gold tokens or tokens representing real estate or commodities on what that might be. And then basically you lock it as a collateral and you are able to borrow in stable coins. So that is a feature that is very popular, and we have multiple projects reaching out to us even after they had tokenized their assets without our help. But also, of course, a lot of projects from the Web2 space that we're actively working with, because they basically want to get into the Web3 and bring their traditional assets into the digital asset space. And then also the third kind of component of our toolkit is a full-on dashboard for staking and governance and vesting of tokens and the buyback mechanism and everything around the tokenomics of their ecosystem token, which we essentially developed for ourselves in the beginning. Factor token is a governance token. And as a DAO, we give our community the possibilities of interacting with the project and voting on the roadmap and participating in those governance votes, and also have staking pools. So basically, we built it for ourselves, and at some point we decided that it was robust enough to include in the toolkit and provide to other platforms when they might launch their utility token or governance token. So with that full-on kind of RWA toolkit, we are now supporting projects that are starting in the space. So mainly kind of startup projects, or maybe bigger ones that are backed by larger Web2 players. And then kind of like from the data play, we recently incubated a project called RWA.io. And essentially that's a platform that is aggregating all the data around RWA assets in the industry and helping people understand it better. So very excited about that very fast growing baby that we've just launched.
For sure, especially like the way the market is going and where interest is going. Perfectly positioned, it sounds like, for the ongoing wave right now. You mentioned RWA.io, which is great. Check them out. Very nice dashboards and analytics. We're going to feature a little bit of it later because it's actually very helpful for some of the discussions that we're going to have. Um, But yeah, let's thank you for that introduction. That was perfect. Um, let's get into it. Usually the way we start out, and we'll start out that way today as well, is by having a bit of a high level overview of the market. Um, I'll just pull up the screen. Guys, I know like we haven't done this before, but it seemed very relevant in this case. I'm sharing a quick overview of the stocks market. Uh, Large caps, so yeah, the market has been in a bit of a roller coaster. Uh, last week's, but especially the last week. Last week everything was in the red. Now in the last 24 hours, it shot up like 10%. Crypto is no different. Yeah, what are you guys thoughts on the last week's market?
Yeah, I mean, well, yes, S&P 500 is down. Now it's down 3% today. So yeah, it was up big yesterday. Today it's down. Yeah, you said a roller coaster. Yeah, that is. It's been a roller coaster. It's been a roller coaster even in like intraday. Like normally, the first like 30 minutes or an hour after the market open should be like okay, like that's more or less how the day is going to play out. But no, like the past few days, you had to yeah, you had to watch like from open to close. At any given moment, things like the direction could completely flip. Well, like what we saw yesterday, you had that Trump tweet, or it wasn't a tweet, it was a truth social post, and yeah, he put a pause on the tariffs, and the markets liked it. But yeah, I guess today they don't like it as much. Like I think the reality sets in a little bit. Like okay, it's excluding, like he still increased the tariff on China, which is like the main, right. That's like the main thing that people are concerned about. That the importers, right. That's the main thing that the importers are worried about, right. Like Apple. You see Apple at the top over there. Apple is like flying in like multiple planes full of iPhones, like right before the tariff deadline, to like try and uh, get some of their supply in before they have to pay. Like who knows how much more, right? Yeah, so it's pretty funny. The big companies can do stuff like that, and then we can sit around and like think it's pretty cool. It's like a movie or something. But yeah, I mean, we'll see. Like the SME, like the smaller businesses, the main street businesses that aren't Apple. Like, okay, how long does it take to see how those dudes react? Because like, yeah, imagine you started planning around this. You started moving your manufacturing to like Turkey or Brazil, or started looking into like Southeast Asian countries, and then Trump just like peels it back. He's like, okay, no, it's um, yeah, actually, there's no tariffs for 90 days, or is it the 10% tariff for 90 days, except China? Like it's just a.
Do you guys think they're going to like not take him seriously at some point with all hey, we're now launching the tariffs, then now there's a pause, and now they're going to maybe revise the policy and cancel them out at all? Like, do you think the markets are finally going to just kind of ignore that at some point?
You can't ignore it because he because it wasn't like a full bluff. Like he did it, and it crashed the markets like 20%. So yeah, so he did like reverse it in the end. But yeah, I mean it wasn't like it wasn't like a full bluff. He just kind of like backed out at the last second. Like, he even said in yesterday's press, he had like a press briefing at the White House. He said he wasn't even negotiating. He said like sometimes you're not even negotiating until you are. So like, yeah. So he even kind of admits it's like, okay, he's just going with the flow. Like the market's looking pretty bad. It's not even just stocks, like bonds. Yeah, the bond market had that was like even more explosive in many ways than stocks. And yeah, so I think someone whispered in his ear, maybe Treasury's Secretary Bessent probably whispered in his ear, like, all right, we gotta take a bit of a different approach. Like maybe you can keep the tariffs, you can keep some of them, but yeah, right now it's a little
Yeah.
too extreme.
Well, that's a good point, right? Because like apparently, like the strategy was for like to affect the bond yields, but even those weren't going in the right direction.
Yeah, people are saying that. I mean, I think that was like a flawed argument. Because yeah, that really is like playing with fire. So yeah, I don't think it's like a 4D chess. It is definitely not like a 4D chess move. He probably just got burned a little too much, and had to reverse course a little bit. So yeah, I definitely don't think it's like a grand plan. Like he had it all in his notebook. He had a plan like, all right, I'm gonna, when the market is minus 20%, then I'm gonna put out a tweet. And like, no, I think he he definitely came up with this on the fly. But yeah, it was a good save, right? And the markets liked it, so it was a good save.
So, a question, right? Yeah, D. Well, maybe actually you can touch on that as well, if you have any idea. But also definitely like feel free to say what you were gonna say. I was specifically wondering, like, okay, why the pause on everything, but not China?
I mean, I think that there was another thing that came out where I think because Trump watches tons of TV, and I think Jamie Dimon did an interview on
Classic
Fox.
boomer.
Yeah, like we all look at our phone for news. Maybe people's parents was newspapers, radio, television. So he watches hours and hours of TV whilst he eats his Big Mac and drinks his eighth Coke of the day. So we watched an interview with Jamie Dimon, and Jamie Dimon said something. We're much closer to a recession now, and whether you believe it or not, that supposedly was another thing that was a big impact in pausing some of these tariffs, right? Because you can imagine what he might have been sat there watching TV. What? Jamie Dimon says we need to pass tariffs. So, he might think he's a really smart guy and then see him say this on TV and turn around straight away. We need to pass tariffs. So it's one of those where it's such like a clusterfuck of craziness that it's almost negative to try and find the sanity in all of it, because none of us were around at a time where tariffs were a huge thing. Sure, you can take impact, you can take examples of when Trump previously was in power and he had a trade war ongoing in China, but again, you can look back far enough to interviews he did with previous reporters before he was even a president, and the same rhetoric was there. The tariffs, what China's doing to us is terrible. But then on the flip side of it, I think it touches what we did in the last podcast where we spoke about the hyper financialization and the rise of populism again. And that, not most people didn't jump on this wave of computers, finance, AI. There is a large group of people who, in essence, were sort of left behind and didn't see their quality of life improve with this increased, technology, finance that's gone on over the last 20 years. I think sometimes it's the more simple view there that, they don't give a shit about, our internet currencies or someone's holdings of stocks in their 401k. I think it's much more, maybe these guys who live in the Rust Belt of America who feel like they've been betrayed, and we used to manufacture everything. Everything was great. We were rich. And now people want to go back to things that give them that sense of nostalgia, I think. And I think that's a big underlying theme amongst all of it.
Yeah. The interviews that you're talking about he was talking about Qatar and Japan so he's been saying this like before China was even like a thing, or he was saying this before China was like the peer competitor. Yeah, he's been saying this since like the 80s. Qatar and Japan was the country he was talking about in like those decades old interviews. So he's consistent like across generations. So yeah.
Well, he doesn't seem that consistent, but I guess if you zoom out far
on
enough,
a day,
he is.
on a day-to-day basis, he's not consistent. But on like a on like a 10 year to 10-year basis, like okay, he's actually saying like the exact same things. He hasn't really changed that much. So yeah, that's just kind of interesting that he's been saying the same thing when Japan was like the primary threat, you could say, that was like stealing manufacturing away from those American incumbents.
I think it's an interesting question of why he didn't pause the tariffs on China, because like I read Chinese news as well, and like the general my understanding of China is that China never wants to be kind of like a bipolar world with two powers. Like it always wants a balance. That's why they always bring up Russia or EU, like, or some other third country. They never want to be just against that one, strongest economy, which is the US. Because they want peace, essentially. And in all the articles that I've seen that they publish in Chinese, they say basically like China will respond and will continue to respond with the tariffs. But in the end, China just wants a peaceful negotiation. China didn't want to have that sort of slap in the face. So from his administration, I think they need to take really careful steps towards a more peaceful conclusion for that relationship, because, I mean, the Chinese economy is still pretty meaningful, and even for themselves, for the US economy. And I find it quite interesting that he's talking about, punishing countries, right? And the trade deficit, whilst the US economy is still pretty much reliant on the Japanese and Chinese investors buying their bonds. So essentially the largest creditors are still Japan and China. And having that discussion of who is I guess, causing the American economy to be the massive rip-off because they're selling products back to them is a big question, because at the same time they're financing their economy essentially. So
that is true. Yeah, like who bailed out the government in the global financial crisis, right? There's Japan and China, so that is true. yeah, so we'll see. Like, there's a lot of routes it can take, right? Like, what if, yeah, so I think they hinted at one of the things they could do is like stop enforcing copyright infringement for like American patent designs and just let like Chinese factories just like much more explicitly just like straight up copy the designs from the American companies. Like what would that do if all of a sudden you had American brands and then you had a product exactly like it just being dumped? So yeah, I think they had like 6 threats, not threats, but like I think they gave out like 6 things from the Chinese government that they could potentially consider doing. So there's something like that. It was like, like banning the export of certain minerals, stuff like that. So, yeah.
Or for any of the history buffs out there who remember, I think, was it in the 80s or the 70s, you had the Plaza Accord, where many of the G7 countries met up together to decide with a global attempt to devalue the dollar. And essentially what followed after that was, this incredible period of history where some people argue there was a new Bretton Woods system where, Nixon got rid of the gold standard and instead, it was just the Chinese buying US treasuries. And now you see this sort of repeated thing of the Mar-a-Lago Accord. Is all of this tariff stuff just sort of a fugazi to bring people to the negotiating table to do some sort of, again, a global coordination of devaluing the dollar? Because, when you think about it, in a sense, with the dollar as the reserve currency, a lot of people in emerging markets, they hold dollars, like we spoke about Cambodia a week ago. In Cambodia, for example, you use dollars out there. And in a lot of emerging countries, Argentina, people hold dollars. And so if you look over the last year or two, over the last 4 or 5 years, during the rate hiking cycle where the rates went higher, I think typically what coincides with that is you often get these dollar shortages because everyone in foreign countries wants to hold dollars. No one wants to hold their own local currency because they're almost like shit coins in a way. And it's in the same way we've seen in the crypto market sometimes. The rise of Bitcoin dominance. And what have we seen over the last few months is altcoins have been wrecked. And I think there is some parallels between what we see in our market and what you see in these other markets around the world, whether that's sets a stage for, again, a Plaza Accord 2.0, Mar-a-Lago Accord. Who knows? I mean, I know a lot of people have suggested that, but again, with a lot of craziness involved, it's often hard to put your finger on if that's actually true or not. But it's definitely worth reading about the Plaza Accord.
This is interesting. And to your point, right? Like, stable coins are doing great. So that might be a sign that, like you said, like the world needs dollars. Stablecoins is doing great. To segue a little bit into RWAs, Anastasia, very like general question, putting it out there, like all of this, like the thing with tariffs and everything that's going on these last few weeks, is this good for RWAs or is this bad?
I think it really depends which RWAs, I suppose. So, the real world assets is basically a universe of different assets right now, all coming from the traditional asset market. And imagine if there were assets like stocks and equities that were tokenized and now coming on chain, becoming a large part of RWAs together with the treasuries. These are the assets that people, I think, need to watch very carefully because a lot of their value derives from that traditional asset market where a company is essentially defining the value of that asset, of that token, and the company might be, under the influence of the tariffs or the trade war, or it's listed in the US market. And essentially, any company that is doing that cross-border relationship, especially if it's directly related to the cross-border relationship with China, I think it will be affected. And therefore, that RWA class will actually be maybe less attractive or the one that people need to be sort of careful with. However, I think the rest of the RWA market, which would be, precious metals, commodities. Imagine if you're tokenizing agricultural assets somewhere in Latin America, or precious metals out of the UAE, like Dubai, MENA region, and maybe distributing that to EU investors, or across emerging markets, working with some of the assets in Africa and Southeast Asia. I think these are the assets that haven't gone, beyond cross-border relationships, and are kind of the projects working directly with the asset originators and the asset owners in those local jurisdictions, and essentially opening access to that asset through tokenization to various investors across the globe. I think that is pretty attractive market now, because obviously that is less directly correlated with the capital markets, and I think have been doing relatively stable recently compared to, let's say, all the other assets in the crypto universe.
Interesting. Okay. So sure, like it depends on, because like RWAs is actually a very broad term, right? There's so much like that falls under that, and they might behave differently in a macro environment like this. That's a great point. Um, all right. So looking forward a little bit, right? What are things that, and of course, it's hard to predict, but like, what are things that we might expect from RWAs in a general sense? We've been hearing like a lot of talk about this specific narrative, as we call it in our industry, and there are definitely a lot of tailwinds. But maybe you can speak a bit more specifically to that. Why is like RWA, like why is everyone so bullish on RWAs right now from an insider's perspective?
I think as an asset class, if we just sort of generalize it in a way that these are the assets that are brought on chain from the traditional asset market, I think it's the most well understood by a regular investor. So, forget about the crypto bros and everybody who's been, degens and the crypto natives. Like, what about, your classmates, our parents, like these people that are aware of the capital markets, aware of the crypto market, just by knowing Bitcoin, maybe, Ethereum at most, but technically haven't interacted with that market yet. And so maybe they're not even planning to interact with that market, but they're now starting to hear and understand that the traditional players, and especially the institutions, with the Beatles of the world, like the people, they had been having significant capital, and obviously, the Gen Z is still quite young to be the, asset and capital allocators, and it's still with the millennials and the boomers. And so these people with the capital, what kind of instruments do they have at hand to essentially deploy their capital across different asset classes? And now that part of their choice is these type of institutional players, like Wisdom Tree or Securitize now coming with Ethena to launch their institutional platform. Like these type of institutional players, they will be kind of packaged into that traditional finance value proposition that is understood by the traditional investors. And then when they look beyond that, not only that it will be available for them on an institutional level where everything has been, KYC'd and structured for them by the, the Fidelities of the world, there are also these retail investors with significant capital that they can deploy and with very minimal understanding of the crypto market. So they're not interested in the meme coins, and they're not interested in bridging your Solana tokens and, looking into the project and studying their Twitter to find out if it's an actual project or it's dead or it's a rug pull. Like they're not from that world. And for them, understanding real world assets is pretty much like understanding equities when they research companies to invest in on the stock market, or when they look into commodities and when they decide whether, silver is going to outperform gold, or whether, I don't know, crops of corn is going to outperform any other, commodity in the agricultural market. Like these are the people that might be sort of familiar with trading maybe futures on commodities at the very, advanced level, I suppose. But the fact that it's being tokenized and it's being, as a product, as an RWA, being brought to them in a very accessible form, I think that's fascinating, because then, imagine 2-3 years, 5 years later, people are going to very actively interact with that asset type, and the asset type covers trillions of dollars in the traditional market.
Hey, so you touch on an interesting point to me, right? Because you say like, okay, this is sort of like combining like an asset class that is like very widely understood by everyone, but combining it with sort of like the accessibility. You're saying, if I'm understanding correctly, with like crypto and but like within crypto itself, we always actually think of, we talk about like the UX UI problem, and everything is like so complicated and it's like very hard, and like non-crypto natives like will never understand. But so like how do you like where's like the disconnect for me? Because you're saying like it's more accessible, but maybe you mean it's more accessible in the sense that, if you're like an institution, there are like a lot of regulations in place, things of that nature. Maybe it's more on that side, what you're talking about.
So yeah, I can explain maybe with some of the examples of, for example, how Defactor works with our clients. Like our clients, imagine they are building a real estate platform, and imagine they came from a very established Web2 background where they have a developer company, they build condos, they are, I don't know, 10 years in that industry, and they already have, like, let's say, something that a traditional investor is easily understanding and easily interacting with, which is just a website where you pick your property, essentially, right? So from the UI perspective, for that traditional investor that I was just mentioning, that is, very familiar with the fidelities of the world, and now suddenly is starting to understand that those traditional assets have been brought on chain, they would be able to see those assets still within the TradFi UI. And essentially RWA, in my opinion, it should be like ChatGPT at some point. Like, we didn't have that moment yet. We haven't had it, but I'm really looking forward for it to happen, because the ChatGPT moment is basically when you're typing something and you're doing something without even knowing that ChatGPT is adjusting that answer for you, right? And so, or AI in the broader terms, right? So basically for RWA, I think the sort of ultimate integration will happen when you go buy your apartment with your real estate agent and you don't even understand the whole blockchain and what chain we're on, what token standard, what's happening. You will basically provide your wallet address, which your agent can help you set up or can walk you through the process of how you would have it, or perhaps by that time you would have used that wallet already for some other services rather than buying real estate. But the ultimate process would be that you have your wallet to interact with the asset, and the real estate agent is already familiar with the platform that they're using. Maybe that platform is Web2, and the rails for the blockchain have been provided by companies like Defactor. And basically, the whole process of tokenization and onboarding the client and distributing the asset into their wallet and getting that end investor familiar with that whole structure is done by the tech party or the consultant. But essentially, it's also embedded into the traditional way of interacting with the asset that they don't really need to be a crypto native to understand it. At the moment, yes, you can interact with, let's say, tokenized gold. You can buy Paxos Gold, or one of our clients, Oris, like they issue gold, silver, and platinum in tokenized form. We collaborated with them on launching a lending pool against gold. So that is very retail friendly. You can basically get on board and get the tokens, but that still kind of is, the assumption that you are a bit crypto native to understand that you're buying, tokens on different chains, and you will have to actually go and click everything yourself. But what I'm talking about is the integration where it's going to be at that UI of the Web2 world, and the RWA infrastructure will just happen in the back end. And hopefully that's not too far in the future from now, hopefully.
Yeah,
That makes sense, and that's a great example. Daniel, definitely like feel free to add on to that. But
I think it's good to separate. Yeah, I think it's definitely good to separate the retail and institutional side of RWA. So I think, RWA has been around for a while. So yeah, I think initially it was more of like a retail focused thing. Like how long has Pax Gold been around? Like it's been around for a long time. It just got listed on Hyperliquid like 3 days ago, right? So that's a retail offering. But yeah, so I think it's important to highlight like where the interest comes from. So like gold's been going up, a lot the past 2 years, and then the demand for on-chain gold is like not right, like it hasn't increased like at all, or not nearly as much, right, as one might expect. So yeah, I think the institutions definitely are driving the majority of this right now. The majority of this narrative and the demand for RWAs, and yeah, so I think like you have tokenized treasuries, right? That's the big one.
Yeah, I think just to add on what you were saying, just wanted to bring up the recent interview from Arthur Hayes and Unchained. It's a pretty interesting podcast. I think all the listeners should check it out. One thing about Hyperliquid, he was mentioning that, everybody from the crypto space kind of came for that whole kind of anarchy where, we want the control. We don't want the TradFi to be controlling our finance. That's why we invented, Bitcoin in the crypto world. But yet with Hyperliquid, I think there was an example of centralization, and he's talking a lot about the DEXs and the centralized exchanges, obviously BitMEX being one of the centralized exchanges from the day one. So that whole kind of topic of, do we need crypto to democratize the financial markets, or are we going towards regulation, I think brings to your second point about institutions moving the market, because what also Arthur was pointing out was that why would people allocate some of their capital to tokenize gold if gold can be bought in its own, traditional way? To what I guess like my, counter argument would be that gold isn't that accessible actually. Like, yeah, sure, developed countries, somebody with, deep pockets can easily go to their broker or their financial advisor, and they can arrange buying, actual gold for them and storing it with like an HSBC account. Even though HSBC is also stepping into tokenized gold, by the way, that was a very successful pilot out of Hong Kong. That was really good. But like, let's say they didn't have that, and the traditional way was like you buying bricks of gold, storing it in the vault, basically. That is not accessible to everybody. And maybe the institutions are the ones that are moving this, capital. But for the retail investors, tokenizing precious metals or agricultural commodities, it is democratizing and bringing that access, in the sense that now it's available to a broader range of investors from different jurisdictions, from different backgrounds in terms of their capital. So it could be just, it doesn't have to be a high net worth individual or a small family office. It can be somebody who wants to deploy, I don't know, 300 USD a month to some kind of assets that they're hoping will be saving their fiat from depreciation. And I think that's the whole point of making these products accessible by retail investors, because yes, the institutions will move the main capital market, but originally crypto is very retail native, and it all started with mining rigs and people nerding and geeking around the blockchain space. So it is solving an actual problem for the user in the end.
I think another interesting point as well is I'll use Moonshot as an example, right? During the meme mania, we saw Moonshot come out as this application to onboard the masses to trade meme coins, right? Now, whilst we can argue all day about meme coins and if they were good or bad for the space, but I think an interesting thing about that was how easy something like that made individuals to gain exposure to meme coins. Now, if you extrapolate that on a much larger scale, let's say you have the average Joe at the weekend who's on his smartphone, and he wants to buy some gold or some other RWA asset. He wouldn't be able to do it, even if he didn't have a stock account. He'd have to wait till Monday, go through all this BS bureaucracy, signing up to account, ID, your bank details, everything. Whereas I guess you could argue the case for RWAs is it simply the intersection between the ease of purchasing an asset, like something like Moonshot did for meme coins, except for RWAs? Is that what onboards the next 100,000 million users, simply being able to buy some of these assets relatively easily. I mean, I had people in my family who could easily download Moonshot and buy a meme coin. And if people can do that, I don't think there's any reason that people shouldn't be able to do something like that with RWAs instead. And I think another point is Robinhood. I think they said they settle a lot of their weekend activity using stablecoins now. So, I think there certainly is a case to be made that maybe it's a bit more simplistic than what we realize, and actually
it's definitely just ease of access. You said ease of purchasing. Yeah, so ease of purchasing, ease of access is definitely like, I don't think a lot of people actually, or that like no one's buying a meme coin because it's decentralized, right? Because they think it's like cool that it's decentralized. Oh, it's on the blockchain. It's just it's really accessible. So I think Robinhood, they're already I think it's 1/3 of their revenue is already derived from crypto. So I'm not. They may already have like a gold. I think is a Revolut or Wise that has like a gold thing. But yeah, Robinhood could definitely roll out like some gold thing, and it's just you're just buying Pax Gold, and then Robinhood holds it for you, and that's all it is. And it's just it's just put like that on the Robinhood, on their app, on the UI, and it's simple. So I think it's just about using like fintechs like Robinhood, other fintechs to unlock new customers, because I think traditionally there wasn't too much overlap between like who is using crypto and and retail people that would maybe be interested in RWAs. It was like kind of like an opposite. Like dudes who would be interested in like owning gold on a fintech might be like 50-year-old dads or something, and then who is the average crypto participant? It's like a 25-year-old like young guy, like a high, extremely risk tolerant guy. So it's just not. I guess it's not a good match. So, but now you have like Robinhood and other, Bank of America. You have like, really HSBC. You have reputable institutions that are thinking about this stuff, and they can bring it to their existing clients, right? Like they don't have to worry about a cold start problem attracting these people. Like they already have it, and they can just build on top of RWAs. And so I think it should be good. We'll get into some examples, I guess, of institutions going on chain.
That is great because, like Anastasia said, like so far it is the institutions to a large extent making this push right now, and let's look at an example of that. So people might know Mantra, the RWA blockchain layer 1. And here, I mean, you already see all the names stacked up. It looks pretty sick. But anyway, the announcement is that I'll just read it out loud, right? So Mantra Chain, a layer 1 blockchain purpose-built for tokenized real-world assets, today was April 7. Today announced the launch of the Mantra Ecosystem Fund, MEF, 108 million investment initiative designed to accelerate the growth and adoption of projects within the Mantra ecosystem. I mean, that's huge, of course. And if you look at the names, I mean, definitely like some crypto native, exactly. But I mean, you see ULB in there, Brevin Howard, definitely also like more TradFi names. It's a very interesting announcement, guys. Anastasia, was there a particular reason you wanted to bring this one up?
Well, I think it's quite important for the industry to start building out these kind of hubs that are supported by institutional investors, not just because of the significance. I mean, 108 million and all the eights, I guess, maybe symbolizing that there's a lot of maybe Chinese support from that decision being the lucky number. But it is a significant number for the AUM of a fund, but also 8 is basically on all the license plates in Hong Kong if you are rich enough to put as many as you can on the license plate of your car. So So I think like not only that it's over 100 mil for supporting the RWA projects, but also like if you read the report, or if the readers, if the listeners go into the report, it's basically to support the development of the projects that are building within the Mantra chain ecosystem. And Mantra being relatively an established project, but with their chain going live with the projects only relatively recently, I think it's a big step into the support of those projects, because a lot of them are early stage. Like we've been talking to a number of projects. I think these guys have been focusing on the Cosmos ecosystem, and the projects aren't just treasuries. Like there is real estate, there is trade finance, lending, microcredit in Africa. These kind of projects that are building within the ecosystem that are very interesting. So I think it's important to have these type of funds, and I'm sure Mantra wouldn't be the first, or maybe wouldn't be the only one this year that is launching a big support from institutional investors, because essentially the capital needs to kind of go towards that asset class in a more sort of aggregated way through a platform. Again, they're announcing in that same report or in the recent news that they're licensed by the VARA regulator in Dubai, and basically regulated as an exchange out of the MENA region. So that is also quite important, because everybody is looking towards distribution of the asset. Like once the asset is tokenized, then like what's next? Like you are looking for distribution partners, you're looking for marketplaces, you're looking for license exchanges that are essentially able to bring investors closer to your asset and allow them to interact with that asset. So I think the funding of those projects, as well as funding the platforms that are getting licensed and being responsible for that distribution, I think it's a very important step. And at the moment, I think it's kind of like a key, bottleneck and pain point for the RWA market. So that's why I thought that was significant. And yeah, as you mentioned, like there are some of the the long-term supporters of the project, like Token Bay Capital, but at the same time, there are some TradFi investors coming in, and some of the significant players within the MENA region itself. So I think the support of this diverse kind of ecosystem of investors, I think that was also quite meaningful. That really shows the interest to the RWA space.
And a question to you, because like you're heavily in the RWA space, right? So you might have some insights here. I was thinking myself that maybe, and I don't know if this is true or not, but I'm just wondering, is this sort of like Mantra's answer to, let's say, like the announcement by Athena of and Securitize about Converge, right? It seems like the RWA race, if you will, sort of like heating up. But I don't know, maybe this was brewing for longer. I mean, this is not an initiative that you pull off in a few weeks.
Yeah, I guess certainly not within a few weeks, and certainly not like just reactive to what the other competitors are doing. But I think it's just a general trend. Like Ondo is launching their own chain as well. Like it's basically, I mean, RWA.io has its own chain. We have a test net. People can go ahead and deploy. Like having a chain is the means to get to that, distribution of the assets essentially. So as a project, let's say you're coming from Web2, you don't know anything about blockchain, but now suddenly there's all these layer ones and layer twos, and they come in with their tools. Like for Defactor, for example, we are a protocol that has a toolkit. The toolkit isn't the chain. The toolkit is a toolkit that's deployed on chains. So for us, what we're actively doing as part of our like partnerships and business development initiatives, we're talking to these chains like Mantra, like the more of the regulated chains, and basically seeing how much demand from the RWA projects is there to build on their chain. So then we can bring the toolkit to be compatible to that chain. And then the projects can essentially come and say, okay, I'm deploying on this Plume ecosystem network or on the blockchain or on Mantra. And then I'm becoming part of that ecosystem. But to use tokenization tools, lending and borrowing tools, staking and governance, I'm going to use Defactor because Defactor is already deployed on those chains. That's the play that we're seeing, because basically the more of these chains, each specializing on their own, somebody is, working towards lower fees, somebody's working towards compliance. Everybody was working towards compliance, let's say, I guess, in some way or form. But like, let's say Athena's project with Securitize is strictly institutional. It's permissioned. I believe it's a closed private chain for now, for institutional clients. I might be wrong, but I think that's kind of what they're starting with at least. And for Ondo as well, it's very institutional heavy. So some of these chains are really focused on delivering the infrastructure to the BlackRocks of the world, right? And they are not going to be okay with just any chain like Polygon. Like they need a specific infrastructure that is kind of closed up and permissioned, because that's what their institutions are comfortable working with. But then at the same time, there's a broader community of investors, retail investors, high net worth individuals, and all of these chains. It's not like they're all competing. Like, sure, they're kind of competing with each other, but I don't think they're launching just to outperform another chain. I think it's more or less you have the community, you have some demand from the projects that are wanting to build something with you, and then so you decided to launch a chain to support that. So I think that's kind of the narrative of why people are launching these chains, and the community, I think, is something that is very much directly related to that, because I think at some point we've had so many chains, so many layer ones and so many layer twos, and so many of them are having no community and no engagement. The chain is launched, the founders probably gained some funds, bought a couple of properties and now chilling with their, foundation tokens, which is essentially, the tokens that belong to that network foundation. But there's no activity on the chain. I'm not talking about Mantra specifically. I'm saying any of them,
Yeah,
right?
it happens. Sure.
So basically, whether to launch a chain or not, I think it's a question to whether you will have a community and you need that chain for the users.
Right.
Right,
Okay.
right.
I think that's great nuance. Like these, not every chain in RWAs right now is necessarily competing with each other. It's like a bit more nuanced than that, in the sense that they might cater to different audiences, different use cases within the RWA narrative, because that's still comprised of like all these different like sub niches. That's very interesting. Quick check. I want to keep it going. At the same time, we've been working hard to keep it under 60 minutes. We still have one other example to look at, which we can go over, but I just want to check, like, especially like Anastasia, if you have time.
Yeah, sure. Let's go over the example.
Okay. Because, yeah, so one of these institutions, right, these TradFi institutions that are interested in this, that's what we have an example of. And I'll pull it up right now if it will load quickly enough. So, Wisdom Tree, that should ring a few bells, but maybe you can, because I think not all, yeah, but I think not everyone in crypto might know what Wisdom 3 is or does. Can you like can you briefly introduce it? Like what did it do?
Yeah, sure. I mean, I think for everyone, just if you scroll down the announcement, I think it also has the about Wisdom Tree paragraph somewhere. So it's basically one of the largest asset managers. So basically over 116 billion in assets under management for them, and then they're catering to institutions. But what's interesting with them is that they're now bringing 13 tokenized funds. So essentially, it's funds that are equity funds, money market funds, treasuries as well. So it's essentially a very TradFi product. But now the settlements are going to happen faster. The whole infrastructure is enhanced. So it's essentially getting that access to the traditional product that everybody's familiar with now to institutions in a tokenized form on all the different chains that you see on the screen as well. Obviously Base, Arbitrum being also quite popular chains to tokenize assets, of course, together with Ethereum. And I think basically the demand for this type of products or projects that are now being launched by institutions is essentially coming out of the fact that there are more and more institutions that have crypto on their balance sheet and they have crypto assets and they want to do something with them without getting into fiat and going through the traditional infrastructure of, you need to first onboard your fiat. And then, as a TradFi investor that doesn't have any interaction with crypto, it's kind of like a longer process and you would need to go through a platform to start engaging with crypto assets. But if you're already crypto, not native, but, engaging with crypto as an asset manager or a small family office, then essentially you would be able to have that crypto, USDC deployed directly across the assets through a platform like this. So I think that's why once the demand, which is, the family offices, the high net worth individuals, the hedge funds, started to have crypto assets within their portfolio, now the institutions are trying to tailor their offering.
I'm hoping Anastasia, froze a bit. I hope Anastasia reconnects soon. It was quite abrupt. Like everything was going great, and then we lost her.
Yeah, it's all good. I mean, yeah. So I think we have another large institution. You already have Franklin Templeton. They have their Benji fund. Obviously you had BlackRock, the Buildle fund, across these chains. So yeah, I think you might see more of these. 13 funds. Seems like they put a lot of thought into it, right? You don't just like launch 13 funds just to like dip your toes into crypto, right? You only do that when you've had your team looking into it for a little while, doing your due diligence, getting everything with compliance set up. So I think like when it comes to securitize and things like that, I mean, for some of the like retail participants in crypto, like they're not the target audience, and it might not appeal to them. So I think, but it's still important for legitimizing like RWAs and then crypto more broadly. And then you can also have more like innovative stuff. You can have like private investments brought on chain. Like you can have stuff like that, like stuff that actually was not accessible before, but now can be, right? Versus with like money market funds, like equity index, like, okay, most people can, like, maybe it's more burdensome, you have to make an account, okay, but like most people could access it before. But I think like once we have more of a standard for these tokenized funds, then you might be able to see like some more niche use cases. I think private market, specifically like private market funds, could be interesting. But stuff like this is a good step.
What do you mean by that? Like, can you elaborate on that?
Yeah, like private investments that like Stripe equity, something like that. So something that just wasn't accessible before, and then maybe like you have crypto rails, and then that can be like the final thing that makes it like accessible enough where someone wants to build that out and thinks it could be a good idea, a good investment of their time. So I think this thing from Wisdom Tree is good. I think it's definitely in the institutional direction of things. So I'm not really sure like how, I guess Anastasia, you can talk more in this angle, is like, I'm not sure what the process is like for them to actually go about doing this, like how it compares, contrasts with Franklin Templeton, BlackRock, those guys. Like what are the considerations for institutions when they're rolling out these tokenized funds?
Basically, crypto funds, they have, or any, asset managers, smaller asset managers, family offices, hedge funds, high net worth individuals are now having more and more crypto on their balance sheet and in their portfolio. So essentially, they're wanting to interact with licensed products out there. And basically, when these institutions are coming up with these products, I think they're catering first and foremost to that type of audience. Essentially, the audience with the capital that is ready to deploy capital that was already in stable coins or was already in Bitcoin, and now they want to reallocate it to different assets that are being represented on chain. But the assets are from the traditional world, like the money market funds and so on. So I think that's what's driving the demand for such services and products.
Right. Okay. So we have a lot of institutional, we have a lot of things on the institutional side coming to light. Like, what are some things that you see more on the retail side? So it could be anything like maybe real estate, like fractionalized real estate, like luxury goods. Like, are there any developments right now for things more catered for, the retail audience?
Yeah, I mean, I think all these asset classes that you mentioned, I think they're definitely within that scope of projects that we're actively talking to that want to tokenize assets. I think with luxury goods, it's been quite popular. However, it's different when you want to fractionalize it, because luxury goods come as typically like a one piece, let's say in more of an NFT form, and then if you fractionalize it, and let's say you borrow against your fraction, and then you default on the loan, how do you then liquidate the asset? Because the asset is essentially, one diamond or one car, right? But there had been examples of tokenizing it. Launching lending and borrowing is a bit tricky, but still doable. So, projects like crypto autos, like tokenizing different, luxury cars, sports cars, diamond projects, T diamonds or diamonds, and Diamore. Like these are the projects that we've, seen in the industry for over a year now, and they're still around. So that's a good sign, I suppose. Galileo protocol is focusing on tokenizing luxury goods. So, there are active players within that market, but also it's a lot more, I guess, diverse in the sense that it's, across different asset classes like agricultural commodities and precious metals and real estate. That is not like a real estate fund, but rather something smaller. A lot of real estate tokenization is happening around the MENA region in Dubai. People having giving access to their tokenized condos or villas to a broader range of investors. We've deployed a lending pool with a partner called RWA-focused. They're working with tokenized real estate out of Dubai. So that's been having a lot of retail interest. And they launched their token as well. So that's obviously a good sign for the bull market, where the projects are no longer just fundraising or just talking about their TGE, but actually finally going out there in the market. So that's a good sign from the market. I guess the investors are welcoming that type of trend for these projects. And I don't think there's any, I suppose from the retail side of things, I don't think there's any limit to the different exotic asset classes that we keep hearing. Like I keep being amazed by all the examples. Like I once talked about cannabis tokenization out of Latin America, and they started the call with, "Don't worry, Anastasia, it's totally legal in our jurisdiction." I was like, "Okay, I'm gonna trust you on that. We're just a tech
That's pretty
provider."
funny.
So happy with that. But yeah, this soon you'll have all different types of commodities on chain.
So do you think we might get Hermes bags on chain, Gucci on chain, Versace on chain?
Yeah.
Can't
You know,
wait for it.
I have another question actually. It's around, we see these different companies bringing RWAs on chain. But do you think there's a scenario where you see some of these big companies, let's say, for example, the Treasury in America just decides that, what, we're going to put our bonds on chain. It's not through another intermediary who might purchase the bonds, hold them in a brokerage account, and then issue a one-to-one replica of that on chain. Or even, the example I gave of Hermes. Do you think maybe some of these brands simply turn around and say, well, hang on a minute, surely we are the most trusted ones to tokenize our own assets on chain? Do you think that we might move into a landscape where, in a similar light that we saw during the NFT mania, where we saw, Budweiser, Pepsi, Coca-Cola, Adidas launch their own NFTs? Do you think maybe we might go into an era where we see some of these bigger companies, maybe even government institutions, who they might use the underlying tech, but they're the issuers themselves? Because it's something I've always found.
I mean, it's happening, right? Like with the CBDCs, for example. Like, do you think the average Joe understands what CBDC is? Like, I don't think anybody who's using WeChat Pay understands how WeChat Pay works. But they're forced to use WeChat Pay in China because there's no cash. Like, if you try to go buy, I don't know, a coffee with your cash, the cashier would look at you like, "What are you, from Stone Age?" Like you scan a QR code and you buy it yourself. And oftentimes, actually, you can't find anybody to take your order anymore in Chinese coffee shops or cafes, because there's a QR code on the table. You go ahead and order, and then it just comes after you pay it already, and you pay through WeChat or Alipay, and that money is not on chain. It's not an RWA, but it's a good example of what you've just described, when the traditional market and the average Joe that doesn't have anything to do with crypto is essentially kind of forced to get onboarded onto these payment mechanisms that they barely understand how they work, but it's so intuitive, easy, and I guess in China, it's been implemented relatively successfully because in China, there's kind of almost no question about trusting the government. And essentially everybody gets onboarded with the system, and it's functioning, and people like genuinely believe that this has no fault and it's not going to be hacked. And if the China government implemented that's like the best and most secure way, and that's why it works in China, and that's why they're able to sort of manage the 1.5 billion people essentially, right? Because they have a system and they follow it. And so for that to be implemented by, let's say, a more, I guess, diverse range of counterparties, like the different, from the capitalist world, different brands, different, competing markets, different governments within the same, like let's say EU is a bunch of different governments, but they all need to work together. What if all of them go and implement the CBDC for, for the euro, obviously, but then also for the payments between different banks? Like if all of them are forced to essentially use that, I think it will only get implemented in a more sort of authoritarian way, I suppose, when everybody has to move onto those rails. Otherwise, it just wouldn't work. Like, I don't think there's any step in between where we're kind of like experimenting with this, but then also at the same time, we need to go and do it. So that's why I think we're struggling with implementations of CBDCs across different markets, because they're not China. They're not, they can't decide on one day, let's go and do all of this, and then nobody has anything to say against it. So that's why I think there's a lot of pilot projects and a lot of CBDC discussions for the government just to go and say the treasuries are going to be on chain. I think there's a lot more infrastructure that needs to happen, as opposed to even just retail investor education, because I think that part, and eventually once everything is deployed and well functioning, it doesn't need to be even implemented. Like the educational part, I think it will come as an intuitive process where something is already on blockchain, they don't even know about it. That's that ChatGPT moment that I was talking about earlier, where the investors wouldn't even know that they're using something that's on chain. They would just have it in their wallet, and then they don't have to understand what the wallet is. They just know that's something that holds their assets and don't lose the key to it, just like it's a bank account, right? Like you have passwords to your bank account when you log into online banking. Like that's the same thing, essentially. So yeah, I think like that's something that we might see in the future, but I don't think it will happen soon because.
And do you think there could be some risks? Last point. Do you think there could be some risks that we could envisage from all of this? Because there's a story that went on in the London Metals Exchange a few years ago, where a huge shipment of nickel or cobalt arrived, and it was just a big bag of rocks. It wasn't even the underlying thing that had been traded. And what do you think that some of these RWA companies can do to ensure that that trust is reciprocated, right? Because whilst it's all well and good, we're going to tokenize all these assets, put all of these assets on chain, especially in the case of commodities, where do you think is that link where that trust can be concrete, in the sense that, this company does have this many kilos of gold, this company does have this many kilos of copper, or, these guys actually do hold this 100 million in treasuries, which they're claiming to? Because it's something I've often thought about with RWAs and blockchain. How do you ensure that trust is met?
Yeah, I think it's a great question. And I think the answer is that there are so many different stakeholders and counterparties that are involved in the process, that they are there for a reason, essentially. So every time we're talking to a client that is asking us like, well, how difficult is it to tokenize my asset? And how quickly are you going to deploy this? And, can it be done within a week, or does it have to take 3 months? And the answer is always like, how well prepared are they from the whole kind of infrastructure and setup perspective? Because we as a tech provider are happy to work with any KYC provider that they choose, with any custodian that they choose, with any structure of that asset that they choose, be it an SPV registered somewhere in the BVI or in more kind of regulated environment somewhere in the EU and so on. But those steps have to be taken before the asset is actually minted. The asset minting is based on different parameters and essentially the metadata around the asset, which is, as you mentioned, like, do we have any certificates for proving that that asset exists, or the asset is in custody, or that asset has certain characteristics? Like, is that an actual Gucci bag or not? Like these things have to be audited and essentially, I guess, supported by all these different counterparties that need to be trusted. And eventually, once we trust the custodian that is there, we trust the custodian of the digital assets and the physical assets, we trust the auditor, we trust the the infrastructure behind the legal setup for that particular asset. And then once it's on chain, we also need to trust all the transaction monitoring and KYC in place and AML, because that is essentially guaranteeing the later risks that come in after you start interacting with the asset. Because what if there's any other wallets that are interacting with that asset on that particular marketplace or in that exchange that are what we call the assets that are involved in some activities, and they're not supposed to pass KYC, but then you never knew that your tokenized gold came from that type of wallet. So for that reason, we need transaction monitoring and AML procedures in place. So all of these different companies, like now, if you go and try to find a job in crypto, right, and you try to pick like who do I join, there's so many. There's like a universe of different providers, and they're there for a reason, because only the combination of all of them working together is sort of what we can use to guarantee that essentially that the whole setup will work and it will be legitimate, and the investor that doesn't understand the market and the technology will be able to interact with that safely and peacefully and sleep well at night, kind of thing. And that is for a reason that traditional markets also function in that way. HSBC is also a custodian and a trading exchange, and multiple functions are within that one bank, but it's I don't know how many years is HSBC, but definitely an old giant, right? So all of these different functions are provided by different counterparties.
Sure, thank you.
Actually, I'm going to Google how old is HSBC.
Yeah, too old.
Great questions, guys.
Hundreds of years, probably.
We're gonna start closing it out.
Since March 1865.
1865. Wow. Guys, we're going to close it out. But before we do that, we're going to have some fun with our section, winners and losers. So yeah, the way this works is all of our speakers pick one winner and loser for the, let's say, week to date. So like starting Monday to now. They don't just have to be tokens or projects. They can be narratives. They can be meme coins. They can be specific apps, launches, TGEs, events, you name it. So, yeah, who wants to kick it off?
I'm happy to kick it off.
Let's go.
So I'll start off with a different note. The winner of the week, in one sense, is crime, because in this immense amount of flip-flopping we've seen from the administration, I'm sure a lot of people have profited heavily off of these whipsaw action that we've seen across traditional markets and crypto market. And another loser of the week is justice.
Wait. Why is that? Why is that crime? Like that's what do you mean? That's just trading.
I'm talking insider trading. I'm talking people acting on information early. And that's why I think that that's been the winner of the week. And the loser of the week has been justice, in the sense that we had Gensler protecting our backs. Everyone wants Gensler back now. Protect us, Gary. Protect me from this industry. It's killing my familia. So, but on a more serious note, winner of the week, again, I'm going to be boring. I'm going to stick with Bitcoin. Either we got loads more pain to come, or maybe, just maybe, there's that dampened volatility. We're not going to see as bad a drawdown. Maybe it's coming in the weeks ahead. I'll eat my words as usual if that's the case. And loser of the week, it's probably got to be Ethereum again. I hate to bash on ETH or the .ETH crowd, but someone put a tweet out today, and it combined. So, for the same amount of worth that the market cap of Ethereum is worth, you could buy like the whole companies of like Robinhood, CME. Did you see the same thing? And so, it's been a tough old time for the .ETHs. The infrastructure gets used heavily, smart contracts get used, but the token's just not seeing any love.
Fair, tough, but it is what it is. Anastasia, what are your winners and losers of the weeks? And yeah, they can't be within like your domain, right?
Yeah, well, so I guess I started with loser, so I would have to agree about ETH. Myself have been in ETH for years, and I think it's a very essentially it's a shame that it drops as much as altcoins, and actually it's a blue chip coin that needs to stay up pretty much within the range that Bitcoin does stay at. So I think in terms of the volatility, I mean, so it's a shame. I think that it's so volatile compared to Bitcoin. Obviously, I think Bitcoin is the ultimate kind of asset, the benchmark for the market. And, if you don't know anything about crypto, store any of your assets in Bitcoin. That's kind of like the general answer that I give to people that ask me like, oh, so you work in crypto, give me like, top 10 coins.
Yeah.
And so but yeah, it's a shame that Ethereum has basically fluctuated so much. And I think it's the biggest community, still the biggest community of developers. We just see so much activity for, I think the latest their event was ETH Taipei, the most recent one that our team went to in Taiwan. And DEF CON, all of the ETH Denver, all of these events are just a proof of such a large community of builders. And I think if everything, as they say, that shit hits the fan, like I think Ethereum will stay around because there's so many applications already built on that chain, already being used for so many years. And that's why I think that definitely shouldn't be a loser, but unfortunately in terms of the volatility and the fluctuation of the token, we can still see it in the sort of more volatile spectrum. And then for the winners, I think from the RWA space, definitely, watch out for the OM token, for Mantra, and for Ondo, and Ethena, ENA. So essentially, these are the assets that have been kind of announcing more news, announcing something that they're launching, that have been growing relatively. I think Ondo is up 16% the past 24 hours. That's a good example of how when everything is going down, the RWA market is still not as volatile as the rest of the crypto market, and definitely not as falling as the traditional market. So I think watch out for those tokens and see how the narrative is developing in the next couple of months.
Yeah, for sure. RWAs are taking a dub. Daniel.
I think they suffered the worst fate of literally the bearer chain launched potentially at the start of a bear market. That was one of my biggest fears. Honestly, through the whole build up, farming bearer, buying NFTs, I was heavily involved, in Honeycomb, BitBears, everything, right? And in the back of my mind, I just could never shake off this feeling that these ironic things happen in crypto so often. And the one that I just didn't want to be true, but maybe I should listen to my subconscious slightly more, is that bearer would launch during the bear market or just before a bear market kicks in of some sort. So I guess I should long my subconscious and short my other part of my brain, because maybe it's worked out better for me.
Maybe you should start listening. I mean, it's poetic, and it's just another example of like reality being more crazy than fiction sometimes. Guys, we're gonna close it out. This was a very cool episode. First time having a guest on. I really enjoyed it. Anastasia, thanks for being on. Very insightful. Yeah.
Thank you guys for inviting.
Of course, it was very insightful to like talk with you and yeah, just get more inside perspective on this specific narrative and like all the different nuances in it, which was great. So yeah, again, thanks for coming on. Also, Dee and Daniel, of course, thanks for being here every week and having my back. Thank you to the audience, everyone for tuning in. We'll be back next Thursday, same time. If you don't want to miss it, turn on your notifications and you can catch the episode on YouTube as well. So that's it. Thanks, guys. See you on the next market cap.
Thanks for picking that time. I'm glad we were able to cover North America, Europe, and Asia. That's an impressive time pick.
That's why we got this time slot. Awesome. Bye-bye, guys.
Bye bye. Thank you all.